Well, everyone seems to be putting out their thoughts on housing and mortgage rates, so I figured I might as well do it too. Let's dive right into the Nova Scotia real estate market as we move into July and on to the rest of 2024. Disclaimer here, my insights and analysis are based on my experience of being a licensed realtor here in Nova Scotia for the past 20 years. So for inventory and listings, we are seeing the inventory levels increase little by little over the last few months. One would assume that means an influx of new listings, but it's actually because some homes are staying on the market longer. At first glance, it sounds like good news for buyers since more options usually means better deals and negotiating power. However, a lot of these homes are on the market because they are priced too high. The days on market show that for Nova Scotia homes, they should be getting offers after 11 days. If a house is on the market longer than that, then it's overpriced. So for sales activity, sales have slowed down since the spring market peak in May. June saw fewer homes sold across all regions of Nova Scotia, and we're likely to see this trend continue over the summer until things pick up again in the fall. Typically, now I don't expect any sympathy for realtors, especially after the record-breaking sales from the COVID years. But this slowdown isn't just impacting realtors. It's a ripple effect that's hitting mortgage brokers, house inspectors, renovation trades, and lawyers too. I know most realtors won't admit it because being busy is supposed to project that they are successful, but for me, this is the slowest it's been in the 20 years that I've been licensed. Now, looking at home prices, they have been gradually increasing since the beginning of COVID with seasonal ups and downs. In general, home prices have doubled from 5 years ago, and they've increased about 37% from 3 years ago. Halifax Dartmouth median home sale prices are up significantly from last year, but only slightly from last month. In rural areas of Nova Scotia, home prices have actually decreased. This shows that buyers who are financially fit and gainfully employed are still buying and buying near areas of high employment. The higher home prices and interest rates aren't having a huge impact on that upper working class. Home prices are dipping in rural areas as less buyers are eligible for mortgages at these rates and current home prices, so there's less demand. Buyers are holding steady and seem to only be moving out of necessity, such as debt, death, or divorce. 5-year mortgages that were taken out at the beginning of COVID will be due for renewal in 2025. Many in the mortgage and financial industries are predicting many mortgage defaults as homeowners won't be able to manage the higher interest rate, they say. I personally doubt there will be as many as people hope, as most people who bought here in Nova Scotia during COVID came with cash and were approved at higher mortgage rates due to the stress test. Also, homeowners who do renew with the same lender won't be subject to the stress test or having the what if scenario added to their mortgage approval. On the new construction front, June saw a spike in building permits, especially in Kings County. A significant number of multiplex and duplex permits have been submitted in Kings County, and 64 apartment units have been approved for construction in the Windsor area. Halifax municipality has reduced turnaround times for residential permits, despite a significant increase in permit requests, likely due to the changes they've done to zoning and the government incentives for secondary suites. This will hopefully relieve the pressure on the rental market. However, newly built homes in areas like the Annapolis Valley and Bedford are still unaffordable for the average and first-time home buyer. They're ranging from $575,000 to $750,000. Now, the current economy is a major factor when it comes to making home ownership a reality. High home prices are not the only reason buyers are sitting on the sidelines. Those with job security and gainful employment are not deterred by the home prices and the current mortgage rates. However, the middle class and below are the ones feeling the brunt of the inflation and the job insecurity and are finding it increasingly difficult to qualify for loans or even think of buying a home. Recent data from Statistics Canada shows unemployment has increased this past month. Though weekly pay rates are rising slightly, it is unclear if these increases are due to more hours worked or the actual demographics who are filling the vacancies. I've heard many people say that finding a job has been extremely difficult lately, even though there are tons of job postings. Many are resorting to having a side job in order to make ends meet. Now, the local and federal governments have been active in trying to make housing more accessible, though mostly through creating more rental units. The federal government has provided tax breaks and loans to municipalities so that they can build new multi unit developments and invest in infrastructure for housing developments. The provincial government still has the new and improved first time home buyers down payment assistance grants. They have forgivable loans for secondary suites, and the federal government still has the income tax rebates. I have a few thoughts on how the Nova Scotian and Canadian governments could really have an impact on the local economy and the housing crisis. Much like the federal government eliminated the HST that contractors had to charge on multi-unit developments, so should the HST be paused on newly constructed single-family homes. Yes, there are rebates already on income taxes, but this would have a more direct impact on buyers being able to qualify for mortgages. Second of all, I would recommend a great government audit. The general consensus is increasingly conscious of the money that government wastes. There are areas with too much red tape, and then there's areas without accountability. Also, increase the communication between departments to eliminate duplication of work and increase the success of the common goals. Thirdly, I would suggest to provide free education or employment assistance to people who need to improve their skill set in order to continue being productive and employable. As widely reported recently, Canada has a productivity problem, and we would do well to invest in the folks who have long-standing investment in Nova Scotia and Canada. This could go a long way to help filling labor shortages and increase the wages for Nova Scotians. Self-employment people should also be covered by this. Looking forward, new listings will continue to decline for the next few months, but we will see an uptick again in the fall. Whenever sellers choose to list their homes this year, they will need to be more deliberate and aggressive when choosing their real estate agent. They need to find one who provides legitimate list prices and is experienced in navigating this evolving market successfully. For buyers who are considering buying, they might have to put in even more efforts for saving, improving their credit rating, maybe even consider developing a skill set for higher salaries, or even look to co-ownership. Now, the Bank of Canada's next rate announcement is July 24th, but I think it's going to be unlikely to see a reduction due to the recent uptick in inflation. I expect maybe a quarter point in September and then maybe a half point in November. I know the bank is aiming to reduce the interest rates without triggering a buying frenzy, thus achieving lower interest rates in time for the homeowners who are set to renew their mortgages in 2025. Be sure to like and subscribe for more updates and insights for the Nova Scotia real estate market. This has been The Real Deal with Dawn.